The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 6th wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes. And I hope that you are off to a start of a great day out there. What a crazy day, nuclear day, as I said, inside the Tiger's Den. Talk about being prisoners of your past versus pioneers of your future. Interesting. In any event, hope you're having a great day. Let's make sure that you and I do everything we can to have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they are communicating to you and I. We'll look at multiple time frames out there. I'm absolutely honored by your presence here. Most importantly, I'm here to serve you. So feel free. Pick up that phone. Dial on in at any time, 877-927-6648. Of course, internationally, 727-445-1044 on this wonderful Wednesday. Of course, this is Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. We got the Dow. She's trading now 215 points right now at 16,944. S&P is off about 22 points, traded at 1994. NASDAQ Composite down 45 points. Russell is off 13. The DAX closed down 96 points. The FTSE down 63. Gold is up $12. Gold, I guess they believe that we're going to just simply throw gold at the Koreans out there. No, that's not it. Gold is trading at 1090. We'll take a look at that. Silver is flat right now. She's trading at 1396. Light sweet crude back $1.81, trading at 34.16. Moving to the upside out here. Let's see if we can find some individual stocks. You've got Regeneron Pharmaceuticals up $11. That's 2%. Netflix up $6 and 6%. Equinix, ticker symbol EQIX, that's up nearly 2%. Google's up $3.50. Ellie Mae, Clampett, she's up $3. That's up 5%. To the downside, boy, these guys just continue to get hammered. And that is Chipotle. That is off $23, traded at $4.25. You've got Lithium Motors down 10%, off $10. Pioneer Natural Resources down 7% or $9. Canadian Pacific Railway, that's down $7 out there. So Sherwin-Williams painting the town red here today, up $6.60, down about 2.5%. So let's go try to figure out what the markets are doing. Let's take a look at the good, the bad, and the ugly out here. If we take a look at the ugly certainly is this morning's move to the downside. In the futures market, the gap's down. I'm assuming the markets, when they open, a gap down. The ETF structures, certainly they did. If we take a look at this panel out here of charts that we're looking at, if you're watching this on TigerTV, we have weekly charts for the S&P 500. That's the upper left-hand corner. The Dow in the middle panel. The NASDAQ Composite to the upper right. Down in the lower left, we've got the Russell 2000. Middle panel down at the bottom, that's the New York Stock Exchange, and the Dow Transports in the bottom right. Now, the Dow Transports are the ones that have certainly been beat up. Nobody gives them credit. You know, everybody. Let's go look at what they have been doing out here. So, in the case of the Dow Transports, if you're watching us on Tiger TV again, you see really four different lines. You've got the two sets of yellow lines, which are nothing more than the rising price channel that the Dow Transports had been traveling in. This is coming off of the March 2009 lows. Just as you and I take a look at horizontal and or diagonal levels of resistance. In this case here, what we like to do, horizontal trading ranges, we like to find where we have the largest number of contacts And then we establish these different floors as if you're building a house. Really the same thing when we're taking a look at this chart here with regard to the rising or declining price channels out here. When you break through one, that means you are going to move up potentially to that next level. And if we take a look at the Dow Transports, what they did back in May of 2014, remember, we're taking a look at a weekly chart, they actually broke above the first channel that they were trading in. However, back here, what the Dow Transports did, everybody knows this, back in November 2014, they topped out and started moving back. They moved back inside a previous line of resistance that should have been support. It was support for a period of time, basically from March, late March through May, the middle of May. So a couple of months out there, price came back, tested support. It finally failed, and price got into that support level. When price gets back into an old level of resistance, it can move down and test its previous support line. That, in essence, is really what the transports are doing. Now, what the transports are doing is two things. Number one, and this is a weekly chart that we're looking at, they have broken through the rising price channel. Now, in the rising price channel here, what I'm using, the yellow lines, that's where I show the largest number of points of contact out here. You like to get 3 or more. But what we also want to have underneath that is a trend line. And that's really the green line that is out there. If the transports go ahead and they break through that trend line on a weekly basis, close below that green line out there, you can safely say that the trend from 2009 inside the transports would be over. In essence, it could move lower. It looks like it's close to testing it, not there just yet, but that's a level that we'll want to pay attention to. And that looks pretty ugly. That looks pretty bad. The ugly part comes when we take a look at the New York Stock Exchange today. Again, this is a weekly chart, so we're going to want to check back in when we take a look at Friday. Of course, we'll really check back in next Monday. That'll be most important. In the case of the New York Stock Exchange, we've got that rising price channel. Those are the yellow lines. We've got the trend line from March of 2009. That is the green line, which came under attack on a monthly basis back in August of 2015. And guess what? As we speak right now, it is trading below that trend line. So it may be the New York Stock Exchange that, certainly it looks ugly out here. And it looks ugly because it has truly, if it closes like this, then we can say that this is the first time that we have seen a close below the trend line. Now, the question is how deep of a close below that. That would then suggest the confirmation that the trend has changed would be on the first counter trend rally as price or if price tries to get back inside that trend line. That is the green line inside the New York Stock Exchange. Again, weekly chart. We're in the middle of the week out here. If we take a look at the Russell 2000, we're also going to see that the Russell 2000 now for this week is trading below its rising price channel. That, again, is the yellow line that is on my screen out here. It has further to fall before it tests its trend line going back. That's the green line going back into the 2009 timeframe. So we'll call that bad, not ugly. But it is definitely ugly if we take a look at the New York Stock Exchange. Now, the Dow itself, if we take a look at it, it never, like the Dow Transports. The Dow Transports were stronger than the Dow. It was able to break through that first level of that rising price channel that was out there, came back in. Now, what we're looking at today inside the Dow is trading right on its trend line on its weekly basis. But if we take a look at the daily chart for the Dow, it's also making a 7th wave move today. Hasn't confirmed, couldn't confirm until tomorrow. But oftentimes a bottoming pattern. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. Dow off 243 right now. S&P off 25. I have a question from John in Sarasota, and Happy New Year to you as well, asking if we could take a look at ticker symbol OAS. OAS is Oasis Petroleum, and the question is, can you share where you see Oasis Petroleum going? So let's take a look. Now, if we were to take a look at I'll put this up on my chart here first. Let's look at the long-term chart, which is the monthly chart. You'll see, now I show this, I only have data going back to July of 2010. So I'll just simply make the assumption I don't have, let me just check my time template out here. No, it's dynamic. It should simply be able to grab all the data that is out there. And if that being the case, we're basically at lows. Now, it's not to the actual low of last month, but there's no way for me to be able to benchmark, hey, what is this thing, going against? So we don't have that. There's really no, as we take a look at this on a monthly chart, there's really no A to B equals CD to the downside on the monthly chart to pay attention to. If we take a look at a weekly chart out there, the weekly chart, what does this show us on a weekly time frame? It shows us, if we were to look at this swing point from back in 2014, December of 2014, that had volume of 50. We'll put this up on the right-hand side. You can see it out here. Volume of 57 million shares. And when Oasis broke through this most recently, there was 65, 71, 55 million. So it has broken through a swing point with volume out there. Really tough to come up with an A to B equals CD that's going to make a difference. And so the question is, where is this going? And the answer I'm going to give is I don't have a clue. When things come off of the bottom, any equity, you like to see some kind of sign of strength. You could call this a trading session here from December 23rd, since it was a holiday, had 16 million shares in it. We could call that certainly a junior sign of strength out there. On December 23rd, maybe it was really about 25 million shares or something along those lines. I don't really know how we equate that volume. So if you're looking for a bottom out here, John, the only thing that you really can do is, let this come back and test the the low perhaps of December 22nd. That would be 634, and do it with less than 11 million shares out there. The last time that price came down here into that level was December 30th. Obviously, also another light trading session, but that was 10 million shares going against that 11 million shares. So I'd have to, and then. If this continues lower, you've got to wait for a sign of strength. Of course, you probably want to take a look at Oasis Petroleum and how this is trading with regard to light sweet crude. So there's no market profiles as an example that I could give you. Well, when I say no, I'm really referring to daily and weekly out here. If I go ahead and turn on, let's say, the 60-minute time frames, well, shoot, it's below the bottom of the 60-minute time frames too, so that's not going to help us. I really think you've got to wait. If you're looking for a long position, probably best to wait for a test of that swing point. But then you're going to also want to understand, the correlation that this has with regard to light sweet crude. Now, earlier in the den, I had posted a comment. We discussed this yesterday when we took a look at the Goldilocks out here, and what we were doing is the following. I was just simply making the hypothesis that most of us just simply take a look at the direction of gold or light sweet crude, or we hear many folks talk about that, and just simply the correlation to the U.S. dollar index out there. Yet when we take a look at how everything is priced, we take a look at light sweet crude, we take a look at gold, it's not priced based upon the U.S. dollar index. Not on my screen. How could it be on your screen is really the point. Now, what do I mean by that? Well, what I mean by that is if we take a look at the U.S. dollar index, which, by the way, is trading at 99.47, what we first must stop to recognize is the following, is that the U.S. dollar index, different than the U.S. dollar that you and I go take and, buy light sweet crude or buy gold with, is really a basket of 6 currencies, right? It's the euro, 57%. It's the Japanese yen, 13%. It's the pound, 11%. The Canadian dollar, 9%. The Swedish Corona, 4%. The Swiss franc, 3.6%. So how do we really analyze what's going on inside the commodity complex, truly based upon the U.S. dollar index? And by the way, that correlation, as they make out in the media, they make it seem like it is a one-to-one correlation. If light sweet crude goes up, so too should the market. That's hogwash. That is BS out there. You go do the statistics. I've done them going back, some 13, 14 years out there. It just doesn't hold water. But what we can do, what you and I can do, is if we take a look at, we can price out gold, light sweet crude. We can price anything that we want out based upon the U.S. dollar index. Now, one of the ways that I did this, we took a look at gold yesterday. We're not going to do that here today. We're going to take a look at light sweet crude because that was a question that was posed inside of the den yesterday. Let's take a look at that here in detail. Let me first see if I can turn this off. There we go. So this chart that you and I are looking at right now, this is the way we would typically look at light sweet crude. We would say now, because I'm using a line chart out here, what we are looking at is the closing of price. So I'm not taking a look at a candle. I'm not taking a look at a bar where we can see the extreme emotions, the high and the low. We're just simply looking at the closes out here. And one way to take a look at it is, hey, guess what? Light sweet crude is trading below the closing low from back in February of 2009. 37.51 is the number that I have for the close. That's the red line that is going across my screen out here. 37.51, even though it says 37.59 on my screen. We can also see my data just simply coming back here to the 2002 time frame. If we take a look at trend lines, what you and I would believe is that light sweet crude has broken its trend. Now, that's true just taking a look at it this way. But what if we look at it truly priced on the basket of currencies? So all that I've really done out here, let me turn this off. There we go. Let's turn this off here. If we take a look at light sweet crude, all I've done is I have multiplied the price of light sweet crude by the U.S. dollar index. In other words, I've got a unit list because I'm taking a look at the entire basket of currencies. Because when you go over to Europe, those of you who've traveled to Europe, you're not going to the gas station. You're not, and paying in dollars for the most part, unless you're not paying in dollars. Even if you use your credit card, they're going to go ahead and do a currency conversion. If you wanted to go buy gold and you're in Europe, what are you going to do? You're going to be buying it based on what? How many euros is it going to cost you to buy an ounce of gold? Same thing with regard to gasoline, light sweet crude, anything that you would buy over there. Same thing if you're in Canada. Now, in Canada, they might accept the U.S. dollar a little bit more easily than they do over in Europe out there. But here, we're just simply taking a look at the trend the trend out here with regard to light sweet crude. Take a look at this going back to that same time frame back here in 2002. We can see that in essence, light sweet crude has come right back to a rising trend line when we take a look at it by the entire basket of currencies. And I say, something to think about. So, John, the answer to your question, I do not know where OAS is headed to. You may want to go ahead and take a look at light sweet crude and its correlation to that individual stock. Of course, if we do take a look at Goldilocks, and here the upper portion is priced based upon what the U.S. dollar index is doing, we can see that gold has basically been in a rising trend line amongst the entire basket of currencies that is out there versus just simply here gold, what's it going to cost you as far as inside the U.S. dollar. Now we can see gold has broken out. When I say broken out, it's actually broken out above a consolidation level. That looks fairly positive. You've got gold trading at 1092. So let's go take a look at that when we get back from this break. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We took a look at light sweet crude and looked at it a different way. Now, the reason that we want to take a look at things differently out there is if we're all looking at the same way, what edge does that provide to you and I? And for those of you that believe that light sweet crude is going to also move in the direction of what the U.S. dollar index is doing, let me give you some statistics to consider out here. The data that I went ahead and pulled was the last 3,289 days, basically the last 9.5 years out there. And what would you think are the percentages of, actually, let's just take a look at it since the high in June 10th. Let's just bring that in here. Let's just take a look, because light sweet crude made a high June 10th, 2014. So since that period of time, how often do you think that the day that the light sweet crude goes up, that the U.S. dollar index is going down, right? Because there would be an inverse relationship, right? So what's the percentage of time? And how about let's include in there, so let's go ahead and give it a fair, where light sweet crude is going down because the U.S. dollar index is moving up. What would you think that correlation would be? Would you think it would be 80%? 70%? What would be good for you to say that, boy, that's a correlation that is worth paying attention to out there? Would a coin toss work? Because that's all it is a coin toss. It's 53%. So since June the 10th out there, 53%. Now, look, it is improved with regard to the S&P correlation going in both directions out there. That's more like a little bit better than a coin toss, although I don't know much if it's really that much better because it's 61%. Now, I'm just taking a look at this since the June 10th level out there, not going back historically, which is less than that. But let's just take a look at the most current statistics. The reality is when we took a look at that correlation, multiplying it times the U.S. dollar index, the correlation with regard to directionally where it's going, like 92%. Hey, even better than that, I heard Larry this morning, just got the beginning of that out there. He was talking about the Canadian dollar. And there's no question that the Canadian dollar and the Mexican peso are also good currencies if you want to track, if you want to go ahead and track a light sweet crude. In fact, the Canadian dollar of the currency pairs is really the better of them. It's a 70% correlation. It was now that's since that June 10th high. Prior to that, it was like about a 63%. So a lot of data and statistics. Really, the point is, and the summary that I can give to you is, we got to take a look at things a little differently out here. Because if we're just looking at it the same way, maybe we're all going to conclude the same thing out here. Now, back to gold. If gold can close above this little consolidation level, which we're going to call, since we've got our TAS market profiles as well, we're going to call that the 1089 area. And right now you've got gold trading out at 1091. So it's just a couple of bucks. But if, in fact, gold can close above 1089, that says that gold will have broken through that consolidation. Now, price might come back and test it. It would need to reject it like any line of support or resistance. Once you see a break of that, it is typical that price will come back and go ahead and test that level. If it rejects it and it continues its move, whether it's higher or lower, that goes ahead and provides us with the information we need to know as to whether or not it is a real break. If, in fact, it's a real break, we can anticipate that gold is headed to the 1136 area, somewhere around there at a minimum, which is nothing more than the 0.618 retracement level out here. So again, I'll go with this pattern versus the correlation to the U.S. dollar index and what it's doing out there, because I just know statistically, I would prefer to trade the consolidation pattern and other tools that I use out there than I would these correlations that, quite frankly, are no better than a coin toss. In fact, sometimes they're much worse than a coin toss out there. However, and take a look, the importance of currencies. If we take a look at some of the mining equities out here, Rand Gold, you can see that on my screen, Gold Corp, AEM, Barrick Gold, Gold Fields, FCX, however, you can take a look at those others, and you're going to see some green arrows. But if we take a look at FCX, you're going to see that FCX is trading down 50 cents. Why is that? It's really simple. You already know the answer to that, but we're going to go confirm that. I believe we're going to confirm that. I hope we're going to confirm that. Otherwise, I'm going to look like, I'm going to have egg on my face, mud on my face. But I'll bet you, I'm not a betting type. Well, that's not really true. But I'll bet you the reason that FCX is trading lower is because the Australian dollar is trading lower. Because when you trade FCX, well, really you're trading light sweet crude as well as the Australian dollar. So, right, we know we got light sweet crude down to $1.98, but let's go check in on the currency pair and see what it is doing out here. The currency pair, in fact, is trading to the downside. And not only is it trading to the downside, how about this? This is interesting. What it's also done, it's broken through a rising trend line. So where it looked like the Australian dollar had formed a bottom by making a series of higher lows out there. Today, looks like the answer is not so fast. It has broken through that trend line. So the real key here inside the Australian dollar, for those of you that are in FCX, you've got to pay attention to the Australian dollar, is going to be a retest of that trend line. Can it get back above that trend line, or does it reject that? And if it rejects it on a test, and it continues to move lower, then it would not be looking good for FCX, regardless of what gold is doing, regardless of what the other mining equities are doing. That's my take on Freeport McMoran. Let's take a look at silver's not doing a whole heck of a lot out here. So we've covered the commodities. We've covered currencies for the most part. Let's take a look at, let's go take a look at intraday charts. What do the intraday charts tell us? I don't know if you watch, I love college football. I hate the mere fact that we're down to really one game out there. Probably the most interesting game, if I was going to go ahead and create a metaphor. Did you watch the Oregon Ducks and TCU? Now, that game was truly an amazing game. Oregon opened up. Now, TCU, right, their quarterback, what's his name? Deshaun, was thrown in jail, I think, the night before, for some altercation that he had at a bar. Talk about insanity. But in any event, you get your quarterback taken out of the game out there. Of course, the odds immediately flipped in Las Vegas to giving, I think it was pretty much an even-Steven game, or about a 1-point spread between the two teams out there, until they found out that he was thrown in jail. Trayvon Boykin, thank you. Appreciate that. I was thinking, okay. So he gets tossed in jail. This point spreads over to a good team, Oregon, who's got, good starting quarterback. They go ahead in the first half, 31-zip. But their quarterback gets taken out of the game, has a head injury, unfortunately, right? And an amazing game because TCU came back and tied up the game. Just simply amazing. The point that I'm trying to make, or the metaphor, is we really got to go check and see what's going on with the quarterback. Because when you lose the quarterback out there, things can change how fast? That's right, in a heartbeat out there. So let's go check in on really what has been the quarterback of the market to try to get a feel for what's going on. That quarterback of the market, I would say, would be the NQ. So let's go take a look at the NASDAQ. Let's go look at the futures contract, get a feel for what's going on out here. Now, speaking of trend lines, this is a short-term trend line. When we began the show, we were looking at weekly charts. We were looking at long-term trend lines. We didn't touch upon the weekly chart for the NASDAQ. But let's take a look at just simply the daily chart for the NASDAQ. Here's what we know. Just simply coming off that August 24th low out here, we use the bottom of that candle session. We can then use the bottom of September 29th out there. And that is the trend line. That is where price is trading into right now. Now, if price moves higher throughout the rest of the trading session, maybe it's trading at 44.38, maybe it gets up to about 44.57, another 20 points, that's going to be a hammer candle right at a level of support. Likewise, if price continues moving lower, we're looking at 43.47, 42.56. Let's go look at some intraday charts. We come back to this breakout. Steve Rhodes, TFNN.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Dow off 237, S&P is down 24. So we know inside the NQ, we've been taking a look at some different trend lines out here. So we know inside the NQ, our quarterback inside the marketplace, and price is trading basically right up against it. It's traded below it. It's traded. It has also completed, by the way, the NQ has completed a 1-to-1 A to B equals CD to the downside as we speak. So where this closes will be interesting. Let's go see on the shorter term time frame charts what it is providing to us. And by the shorter term time frame, we're just going to look at three. We're going to look at the 300-minute. We're going to take a look at the 120-minute, and we are going to go ahead and take a look at the 30-minute. Now, on the 5-hour chart, the 300-minute chart out here, here's what we know. We know that price had been moving lower with less relative weakness out here. That's the little black diagonal line on my screen out here. Now, just like in these markets here, let's just also recognize we've been in markets that have basically been very choppy. This has been more of a trader's paradise, certainly than an investor's paradise out here. And we know that when the NQ made its most recent high, this was at 2 o'clock in the morning. This was at 2 o'clock in the afternoon, December the 2nd out here. We can see the price is moving higher. It was doing it with less relative strength, create a nice little shooting star at that 2 p.m. session. And then as the contract closed at 5:15, we saw a continued move lower. This other little price relative strength divergent pattern that occurred down here, we really didn't get any kind of bullish reversal signal until right here at about 2,300 hours. A little bit of follow through out here. Price went ahead and did what? It at least bounced. In fact, it almost made it back to its previous highs out there. And that was into the trading session at about 9 o'clock in the morning on December 17th. Now, these are beautiful patterns out here to pay attention to, because what you and I do when we're evaluating these markets, we're really psychologists. Because what trading is all about is 100% about emotion, 100%. You're not going to sell something unless you absolutely need the cash. You're not going to sell anything unless you believe it's not going to go up any higher. And you're not going to buy it if you believe that it's going to continue to go lower out here. The buyer believes that the lows are in. The seller believes that the highs are in out here. So how do we evaluate the emotion of the market? Well, one of the best tools, and we've got several of them, right? We can use the A to B equals CD pattern. We let the market do, 75% of the work for us, and you and I focus on that last leg out there. We master that. We can take a look at Japanese candlesticks, because that's the way the market communicates to you and I. But using those alone without patterns is a fool's game out there. We can use this price relative strength divergent pattern. This helps to really stretch the rubber band and tell us when things are real, when things are likely not real out here. And if we take a look at this pattern, we can see that price was moving lower this morning. You're doing it with less relative weakness. And as we speak right now, as we come into that 2 p.m. session, we've got, 15 minutes. Looks like we have a bullish reversal signal. It's piercing candle. As long as we see price close above 44.17 would be my guess. You've got that piercing candle. If you close above 44.34, you've got a bullish engulfing candle. So you're getting your prerequisite, so to speak, of at least a short-term bottoming pattern is the message coming out of the 5-hour chart for the NQ. So if, in fact, the NQ can hold that trend line, if we get the bullish reversal signal here, you should absolutely anticipate that the market's going to do just as it has done in the past out there, at least some decent type of retracement. If we go take a look at the 120-minute time frame out here, what are we going to find? Well, in the 2-hour time frame chart, we're also going to see price was moving lower, we're doing it with less relative weakness, and not until the first session here of the open, I believe that was from 9 to 11. No, that was from 8 to 10. We got that nice bullish engulfing candle. We see a continued move higher. It's really important in this case for this bounce to continue inside the NQ for price to get above or close above 44.53. Now, if that happens, I think that's right around the level where we took a look at on a daily chart, the NQ perhaps forming a hammer candle at a trend line out there. Does that mean that is going to hold? No, but it does tell you and I where the bulls are, and you and I want to understand where bulls and bears are out here in order to make good trading decisions. If we look at the 30-minute chart out here for the NQ, what is it telling us? Well, in the case of the NQ, we really didn't have that price relative strength divergent pattern out here. My recollection is, I don't recall whether we had a seventh wave move to the downside. Let's go see if we did. Oh, we did. As a matter of fact, okay, so we had a seventh wave move to the downside. Prices moved off of that. We've seen our first retracement. In fact, let's take a look at the 30-minute chart here for the NQ. Let's go over to this set of charts out here, a little bit easier to look at. And on this set of the charts, speaking of trend lines for the NQ, if we take a look at a short-term trend line, that's a trend line coming off of this candle session here at about 12:30, back on December 31st out here. We can see that price had earlier in the day, right around the 10:30 time frame, broken through that trend. We can now see that trend line, price has come back. It's tested it. It's really right underneath it right now. Price may come all the way back to the level of 44.11, which is the bottom of its TAS profile for the 30-minute pattern out here. But if price can get back above that trend line, that would indicate to us that we've got more of a bounce that would be underway. So let's take a look at the NQ on the daily, the 5-hour chart, the 2-hour chart, and the 30-minute chart out there. Have a question. If I would take a look at, what was that ticker symbol? China Mobile, I believe, was the ticker symbol out here. What is China Mobile's? Let me see. Maybe it's still up on my screen. CHL is the ticker symbol. And the question was something like, because I don't see the actual question, my apology out there. The question was something, buy, would you, if you held it, would you sell, would you dump it, would you buy more, what would you do in essence? Now, this is a monthly chart here for China Mobile. My question was, well, what's the actual entry price out here? Because this really hasn't done a whole lot. If we take a look at China Mobile, this again is a monthly chart from the time period of really September of 2008 through the time period of, because it's September 2008, China Mobile was priced at about 57 bucks out here. Right now, you're trading at $52. The low on China Mobile is about 41.30. So even though there's all kinds of problems in China out here, come on, work with me. We can see that China Mobile itself doesn't look like even back on the August lows out here. And I don't know what's going on with my system, but I can't move my cursor. There we go. So let me see. Where was August of 2014? What did China Mobile do in August of 2015? Really didn't do a whole lot out here. I'd have to say that just simply looking at this chart, there's really no reason I could see that you'd want to actually be inside China Mobile. First, you've got the exposure to China out there. Second, since 2008, this stock really hasn't done anything. Now, if you're underwater, maybe that's some kind of different decision out here. There's nothing that indicates to us that this thing's going to, move higher with any kind of conviction. I would say when you've got something that is a loser, cut the, and you've got all this exposure and this thing hasn't really done any better, it's about really being able to put that capital to work. Don't worry about whether it's a losing trade or it is a winning trade out there. It's a matter of putting the capital to work properly. And there are better positions, I think, that you could have than China Mobile. Just take a look at the start here. So that's based upon the information that was presented to me. So, folks, you got the Dow off 255 right now. The S&P down 26. Oh, I'm getting so used to this time clock out here. I was going to do the same thing that Andy did yesterday, which was sign off one segment early. But I won't do that. I'm going to come back for another segment of 4, 5, 6 minutes, whatever it might be. This is Steve Rhodes with TFNN. We'll be right back.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Folks, Dow off 246, S&P down 25. Let's look at a couple of individual stocks. Let's look at those truly getting hammered out here. Chipotle. We had identified a couple different breakout areas, original breakout areas for Chipotle. Right now it's trading below one of those. Those are two yellow lines that are on my screen out here. So we're going to have to go back even further. Whoops. How the heck did I do that? No, I don't want to do that. Okay. So we can see that there was a breakout between the 442, 477 level. There was accelerated volume, a wide-ranging bar. That wide-ranging bar by the gap up. Price is now below that. So where's the next level of potential support for Chipotle? 395.02 is going to be one range. The bottom of that range is going to be, looks like right around the 375 area. So between about 375 to 395 is likely the next potential target area for Chipotle prior to seeing, well, that's really weird. I got two indicators somehow mixed up here. No idea what I did there, but we'll go ahead and correct that. Let me see if I can correct that now because how did I do that? Very interesting. Okay, let's see. That'll work. No, let me do this here. Let's see. Try that. Okay. There we go. A little bit better. So the range, so we've covered the range here for Chipotle. Let's go see what else is moving out there. Sorry, folks, we're just moving the cursor and no clue as to how it did, what it did. Let's look at Canadian Pacific Railway. CP is the ticker symbol. That's down $8. We were taking a look at the transports, how they were moving down into perhaps a long-term trend line. Let's go see if Canadian Pacific is doing the same thing or if it's actually in worse shape. Now, this is the monthly chart that we just put up on our screen out here. If we take a look at trend lines, that would take us back to 2009. Let's go. We'll use a green line just in case it hasn't broken its trend. See if this thing is how this is doing. No, it's got a long way to go before it gets back to its trend line. Maybe that's where it is headed to. And if it's headed down there, that would say, geez, that would say maybe $66, between 66 and 76, 78, 79, somewhere right around there. Canadian Pacific. Let's take a look at what it's done on a daily basis here. On a daily basis, it's breaking through some swing points from back here in the middle of December, 640,000 shares. It has done. That's really interesting. No idea what it's done. So I've really messed this chart up here. It's done 575,000 shares. So 575 taking out 640. Yeah, it's moving lower with volume. That is CP again is the ticker symbol. To the upside, Regeneron Pharmaceuticals are here. REGN. Now, Regeneron Pharmaceuticals, what it has done today thus far, it has completed an A to B equals CD to the downside. That price projection was 489 and a quarter. It's trading at 515. The actual low thus far in Regeneron has been 496 even Steven. Now it's made a 1-to-1 A to B equals CD. It has made a key reversal session. What do I mean by that? I mean that the high and the low of yesterday has been exceeded. We've been in an extended condition. We'll call it an extended condition by completing a 1-to-1 A to B equals CD. As long as this closes one tick in the opposite direction, meaning to the north, meaning above the open of the day, you'll have a key reversal session. Unfortunately, what you would have liked to have seen it also do, which it has not, especially because of this gap down here on January 4th with 1 million shares, you would have liked to have seen this also rejected the swing point from September 28th, the top of which is 492.42 and had volume of 3 million shares. The reason you'd like to see it reject that is because today it's only done 526,000. But it looks like this is attempting to form a bottom. The problem is that this is going to have some fairly stiff resistance at the top of that gap down from Monday on January 4th, and that's at the price point of 532.91. Well, folks, have a wonderful Wednesday. Stay tuned. David White, our man, our polar bear, and I do believe he is a polar bear, he's going to be up next. And then we'll go to the real bear, and that's Tom O'Brien. Have a great day, folks. See you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.